Good morning, and thank you for joining us today for our webinar on long service leave. My name is Angela Lehmann, and I am the Legislation Manager here at ADP. Today we expect that the webinar should run for approximately 30 to 40 minutes. Unfortunately, due to the complexity of this topic and the sheer volume of attendees we have joining us here today, we will not be able to take questions. We will, however, at the end of the presentation, advise you on how you can obtain further information on long service leave and other related topics. We have muted all attendees, and if there are any issues or anything with the webinar, please feel free to chat directly in the box on your right-hand side of your screen. That said, we will be recording today's webinar, and you will receive a link to the recording after the fact. I would like to introduce you all to David Bates, the Managing Director of Workforce Guardian. They are a partner here for ADP.
Hi Angela, how are you going?
Good, thanks David. Thank you for joining us today on this riveting subject.
My pleasure, and look, to be fair, I fully agree that maybe spending half an hour of your life talking about long service leave and tax considerations might not be the most riveting way to spend 30 minutes of your life, but I can absolutely assure everyone taking part in the webinar that this will be a very, very handy webinar today.
Yes, yep, and we do hope that you take away a lot of handy hints and tools from today's session. I think, David, what I'll do is, seeing as you're going first, hand it over to you, and we'll go from there.
Perfect. Thanks very much, Angela. So just for anyone who's not already familiar with the partnership that's in place, Workforce Guardian are very proud partners with ADP. Our range of services ideally complement ADP services. So from a one-stop shop, effectively, you have all of your payroll and your HR taken care of. So it's a beautiful partnership. We quite like it. Yeah, and that's been in place now for quite a few years. So we'll provide some more information towards the end of the webinar for attendees about how they can get more information if they'd like. And as you've already flagged, Angela, this is a very complex topic, and so in the course of a 30-minute webinar, it's, as you said, not possible to go into too much detail, but again, the resources that we'll provide you at the end will help steer everyone towards where they can get further information if they need it. So, what are we going to be talking about in this session? Well, we're going to start off by discussing long service leave and the National Employment Standards. So we'll just explain how these two different entitlements dovetail together. And then what we'll do specifically is talk about the long service leave legislation here in New South Wales. So specifically, what is the source of that legislation and how does that interact with the NES? We'll then move on and drill down, if you like, into the long service leave entitlement itself, so the actual leave entitlement and the rate of pay that's payable when people take long service leave. We'll then move on to talk about a particular part of long service leave that we get asked about all the time here at Workforce Guardian from ADP, and that's what we call pro-rata long service leave. When do employees become entitled to receive a pro-rata payout of their long service leave entitlement? We'll then talk about how long service leave is actually taken here in New South Wales before then looking at some other rules that also apply to long service leave. And really what we're looking at there are some of the most, I guess, frequently asked questions that we receive. And then I'm going to hand it back to you, Angela, to talk about the tax considerations that apply in relation to both taking long service leave and having it paid out.
Yep.
And because we love leaving our attendees with some useful information and further resources, we will provide you with some links that you can follow if you'd like to receive further or to look up further information about your obligations here in New South Wales. So without further ado, let's talk about how long service leave links in with the National Employment Standards. Now, most people taking part in today's webinar would be familiar with the fact that here in New South Wales, the Fair Work Act took effect back on the 1st of July 2009, and the 10 National Employment Standards then followed on the 1st of January 2010. Now, here in New South Wales, the state government effectively transferred all of our state's industrial relations powers back to the Commonwealth Government, and although that sounds complex, it actually simplified things for many employers because it effectively means businesses here in New South Wales that are in the private sector are covered by the Fair Work Act. Now, the Fair Work Act includes these 10 National Employment Standards, or NES. One of those National Employment Standards is long service leave. So the intention, as optimistic as it was back in 2010, the intention was for the federal government to create one national long service leave entitlement, one uniform entitlement right across the country. Now that would have been brilliant if it had come to fruition. Unfortunately, in the years since, that hasn't happened. So as a result, even though we do have a reference to long service leave in the 10 national employment standards, we still need to go back to effectively state and territory-based laws to find out what the long service leave entitlement actually is. So as a result, the New South Wales legislation effectively still applies to most employees, but certainly not all here in New South Wales. Now, for those people who are covered by the New South Wales State Long Service Leave Act, the particular piece of legislation is the one shown on your screen now. This is the Long Service Leave Act of 1955. Now, although that's obviously quite a, well, it's a piece of legislation that's been around for a very long time, it has, of course, as you would expect, been updated since then. So there's been a number of amendments through the years. But one key point I'd like to make here, Angela, is that if an employer is not 100% sure that their employees are covered by this Act, they certainly shouldn't assume, because there's a real risk if you just assume that the Long Service Leave Act applies, that you could then end up either providing incorrect or underpaying employees their long service leave entitlement, and that can be quite tragic down the path, you know.
And I think that's something that we always, that's our messaging to our clients as well, that, you know, if you're not sure, please don't try and guess. Please seek advice to ensure that you are applying the appropriate legislation.
Absolutely, yeah. The only thing that terrifies me more than people not looking for any advice at all is when they just Google the advice. We do have some of the world's most complicated employment laws here in Australia and in New South Wales, so it is absolutely critical to get expert advice just to confirm whether or not your business is captured by the Long Service Leave Act of 1955. So the rest of this webinar, we'll assume that your business is covered by that Act, but if there is an enterprise agreement, if there is some historical award or some other difference in your business, again, make sure that you do double check it. All right, so what is the long service leave entitlement here in New South Wales? Well, at present, an employee becomes entitled to take long service leave after they've completed 10 years of continuous service, and the amount of long service leave they receive is 2 months. So not bad, you get 2 months off after you've completed 10 years service. Now, in reality, I have to say it's a decreasing number of employees who receive this entitlement, because most people do chop and change employment now far more than they ever did before. Certainly younger workers coming into the workplaces now tend to leave employment within just a few years. But for those of you who do stick it out, for those of you who make it to 10 years, you do receive that bonus, if you like, of 2 months long service leave. Now, once you get to that 10-year service mark, well, it doesn't stop. You still continue to accrue long service leave, and in fact you accrue 1 additional month of long service leave for every additional 5 years of service that you complete after that initial 10-year period. So it does continue to accrue beyond that 10-year mark. Now, one thing that we often get asked here at Workforce Guardian from ADP is, do my casual employees accrue long service leave? And the answer is yes. And it's been that way for a very long time, and it's still a very, very common misconception, not just in New South Wales, but in fact right around the country, that casuals don't accrue long service leave, but they certainly do.
Yeah, I have to say, David, we definitely field the same sort of queries here as well. Employers underestimating or not realising that casuals actually do fall under the rules.
And it makes sense that people might mistakenly assume that casuals don't get it, because when you have people coming and going from the workplace, you assume naturally that, you know, they're not going to build up this entitlement. But as we're about to see when we look at what is meant by continuous service and what breaks continuity of service, we'll see that casuals are particularly provided for, if you like, so that they don't miss out on this particular entitlement. So as we just saw, long service leave is based on 10 years continuous service. So what breaks or doesn't break continuity of service? So it's really critical to note that under the New South Wales legislation, if an employee takes an approved absence, and that could be a paid or an unpaid absence, then that will not break their continuity of service. So let's say you have an employee who asks for 3 months of unpaid leave so that they go off and maybe they've just read Eat, Pray, Love. They want to go off and discover themselves. That's awesome. Off they go. They're gone for 3 months. When they come back, because that was a pre-approved absence, that means that it does not break the continuity of service for that employee. Similarly, if an employee leaves their job, let's say they're dismissed, and it is important to distinguish between dismissals and resignations, but let's say that they're dismissed, but then subsequently re-employed by that same employer within 2 months, well, that will also not break their continuity of service. And the third situation when service is not broken is when the employee is dismissed for what the legislation calls slackness of trade, but in more modern terms we would call that a genuine redundancy. Maybe there's been a downturn, for example, in the business, so they reduce the number of staff that they have. Well, if an employee is let go for that reason, but then they're subsequently re-employed down the track, again by that same employer, then there has not been any break in the continuity of service.
Right. So does it matter how far down the track that re-employment is?
Technically, no. The New South Wales legislation doesn't talk about any sort of maximum limit as far as I'm aware.
Wow.
So if you're let go for a redundancy and then re-employed, your continuity of service in that same business is effectively not broken.
There you go.
All right. So let's talk about, though, what absences or what periods of time do not count towards the accumulation of service. So just to be really clear here, what we've just discussed are the circumstances where an employee could be away from the workplace but their continuity of service is not broken. Now what we're talking about are the fact that even though the continuity of service isn't broken, the absence itself doesn't count towards the calculation of overall service. So the first of those examples is any form of unpaid leave. So let's say an employee takes 12 months of unpaid parental leave, which is quite common. They might even extend that by the additional 12 months under the NES. So the employee is effectively gone for 2 years on unpaid leave. Now, if that is the case, we know that the unpaid leave doesn't break continuity of service, as we just saw, because it's a pre-approved form of leave. However, the 2 years that is spent on unpaid parental leave doesn't count towards service. So in other words, an employee would have to do 2 more years in order to make up for that 2-year absence before they become entitled to long service leave. All right, so that's unpaid leave. The second scenario is periods between employment with the same employer. So again, if we go back to that previous scenario about continuity of service, if an employee was made redundant but then re-employed 3 months later, although we know that that didn't break continuity of service, that 3-month gap in between doesn't count towards service. All right, really important that you note that, because what often happens is an employee thinks that they've become entitled to take long service leave, but actually 2 years of their 10 years that they're referring to might have been spent on unpaid parental leave, which means they actually need to wait a further 2 years in order to get access to long service leave. So key to note that really the difference between continuity of service and service that counts towards, or time that counts towards service. Also just want to mention that here in New South Wales, long service leave does continue to accrue while an employee is absent on workers' compensation. And there's actually no maximum period of time here in New South Wales. So an employee could go off on workers' comp and remain employed in the business, but then let's say they're on workers' comp for 2 years. Well, that period of time, that actually does count towards the accumulation of long service. Really key to note that. And this is one of the most commonly asked questions that we receive. Also, for anyone who's taking part in today's webinar who has employees in other states, it's crucial to note that the rules here in relation to the interaction between long service leave and workers' comp are different in every state. Yeah. But for New South Wales-based employees who are covered by the New South Wales Long Service Leave Act, then we know that long service leave does continue to accrue while they're on workers' comp.
Quite generous.
Very generous. In fact, it's one of the most generous long service leave entitlements in the country. And in a few moments, actually, we're going to look at pro-rata long service leave, and we'll discover that, again, New South Wales is also the most generous when it comes to pro-rata as well.
Lucky ducks.
Lucky ducks here in New South Wales, yes. All right, so let's say the employee is now actually going to take long service leave. They've been there for 10 years, so now they've become entitled. Well, the logical question most employers will ask, and no doubt, Angela, they'll then come to ADP with the question, how much do we actually pay the staff when they take long service leave? Well, the answer here in New South Wales, again, comes from the legislation, and it says an employee is entitled to receive what's called their ordinary rate of pay. Now, that term, ordinary rate of pay, means that we exclude from the calculation things like overtime rates, penalty rates, shift loadings, all of those additional amounts that we add on to an employee's base rate because of the times of the day that they work or the particular days of the week. So when we strip those out, what we're left with is the employee's ordinary rate of pay, and that's the amount that we pay when an employee takes long service leave. Now, there are all kinds of tricky scenarios that come up. For example, an employee might receive commission payments fairly regularly. How do we factor those in? And again, that's just beyond the scope of what we can cover in this 30-minute webinar. But where you have one of those sort of out-of-the-box scenarios, very good idea to get expert advice before you agree on the amount of payment that you'll be making. Now, where the ordinary rate of pay is being calculated, what you have to do is consider two things. Firstly, what's the ordinary rate of pay that the employee is receiving immediately before they take their long service leave? And what's been that employee's average ordinary rate over the preceding 5 years? That is, the 5 years leading up to the time that long service leave is taken. And whichever of those two amounts is the higher amount, well, that's the rate, that's the applicable ordinary rate of pay that's going to need to be paid when the employee takes long service leave. So if the employee's average ordinary rate of pay decreased over the last 5 years, you'd need to do that calculation, for example, and you might find that the average over the last 5 years is higher than what it was immediately before the employee took long service leave, and it's that higher rate that would be payable. Very common mistake that people make. Okay, pro-rata long service leave. Everyone loves pro-rata long service leave because, you know, for a long time people didn't have an entitlement to anything until they had completed 10 years of service. And I suppose, as we just discussed, the number of people who stay in a job for 10 years in total has really decreased over the last few decades. So what we have in New South Wales through a number of amendments is we have an entitlement to long service leave, which we call pro-rata long service leave. Now, everywhere else in the country, pro-rata long service leave only kicks in after 7 years of service, but here in New South Wales, it kicks in after just 5 years of service. Now, really critical to note, what we're talking about here is not people taking long service leave. That can still only be done after they've been there for 10 years. So once they've completed 10 years of service, they can actually take the long service leave. What we're talking about here is people receiving a payout of their accrued or pro-rata long service leave. Now, that applies if they've been in employment for between 5 and 10 years and one of the following conditions is met. So these conditions do apply for between 5 and 10 years service. Keep in mind, once an employee has been there for 10 years, these conditions don't apply because you have a guaranteed right to have your long service leave paid out if your employment ends. So these three rules are, first of all, again, remember, the requirement to begin with is they've been there for at least 5 years, and then if the employee leaves employment because of illness, incapacity, or what's called domestic or pressing necessity, and that's a pretty low bar, I have to say. So pretty much any personal circumstance that might be causing significant stress to the employee would qualify as domestic or pressing necessity. Yep. Or if the employee is dismissed by their employer for anything other than serious misconduct, which is generally defined as theft, violence, or fraud, or tragically, if the employee passes away, then if they've completed 5 years of service at that point, their pro-rata long service leave is paid out effectively to their estate. So if any of those three conditions are met and the employee has completed between 5 and 10 years of service, they can have their pro-rata long service leave paid out.
So going back to what we were saying before, it is a little more generous in that it's that 5-year mark as opposed to the 7-year mark, but there are quite a few rules to consider as to the eligibility for it.
Absolutely, and so for example, if we look at that, I mean, if you have an employee that had completed, say, 6 years of service, but then they voluntarily resigned because they got a better offer elsewhere, well, that employee might come to you and say, well, I've completed 5 years and I want my payout, please. At the end of the day, because they just left only because they wanted to take another job and not because of any of those three reasons that are on the screen, then they actually have no entitlement to the payout at all.
Ah, there you go.
So there are some limits, definitely. So again, that's a great example of why it's important to always check the eligibility before you start going around making agreements with employees, for example, to make payments.
Absolutely.
You don't want to enter into any of those agreements until you've received expert advice. All right, so let's say now the employee is actually going to take their long service leave. So in other words, they've been there for 10 years. Now they've got an entitlement to long service leave to actually take it. Well, how do they take it? Well, the New South Wales legislation is very clear. And it says if you've got 2 months accrued, in other words, if you've just completed the 10 years, you can take your long service leave in 2 separate periods. If you've got between 2 months and 19.5 weeks accrued, then you can take it in 2 or 3 separate periods. And if you've been there a super long time, now this is someone who obviously loves their job or has flown under the radar for a very long
time.
Yeah, so they've made it up to 19.5 weeks of accrued long service leave. Well, then they can take it in 2, 3, or 4 separate periods. So really key to note that this isn't a situation where an employer and an employee can just agree to take a day of long service leave here and 3 days over there. It does need to be taken in these stipulated blocks if the employee is covered by this particular act. Now let's just take a look at 3 other rules that also apply to long service leave here in New South Wales. And the first of these is probably the most commonly asked question, right? Because
absolutely.
especially these days, right? Life is expensive. People have kids, or they've got private school fees, or they want to pay some of their mortgage off, etc. So what they do is they logically come to their employer and they say, look, I've got all this long service leave accrued. Can I please cash in or cash out some of that long service leave? Well, the answer is here in New South Wales, you cannot cash in long service leave. It either has to be taken when the employee becomes entitled to take it, or it could be paid out, but only if employment ends and those other criteria that we've just discussed have been met. But other than those circumstances, long service leave should not ever be cashed out. So avoid doing it. It is a breach of the legislation. Now, we talked about an employee having to complete 10 years of service before they can take long service leave. Interestingly, here in New South Wales, we do actually have an entitlement, a specific provision of the Act that allows long service leave to be taken in advance.
Wow.
So let's say I've been employed with a business for 9 years, so I haven't yet quite met my requirement, but maybe my partner has reached their long service leave entitlement and we want to take the trip of a lifetime. So I might go to my boss and say, look, is it okay if I access my long service leave early? And the answer is yes, you can do that here in New South Wales. However, if you do that, at least 1 full month of the long service leave must be taken. So you cannot access long service leave in advance in tiny little bits and pieces. So a week here, a week there, a day here. Can't do that. It has to be taken in a 1 month block. One further rule that's definitely worth mentioning is that leave should also be taken as soon as practicable once the employee has completed that 10 years of service. So once they get there, once they reach that threshold, really it's up to the employer and the employee to agree as quickly as they can on that employee then taking their long service leave. Now, if they mutually agree to defer it, that's fine, but the idea is that it shouldn't just be sitting there as a liability for a very long period of time. And if we keep in mind that long service leave is all about relaxing and recharging, well, from an employer's perspective, you really don't want to delay it too much longer anyway. It's a liability sitting there. You want them to go off and take it.
Absolutely, yeah.
All right. So they're the key rules that apply to long service leave, covering from the New South Wales legislation. Angela, I'll hand it back to you now to talk about the specific tax considerations that apply.
Yes. So as David likes to call it, the even more boring part. But but let's just
essential. Boring but essential.
Boring but essential. And let's just try and relieve everyone by saying at least this is at a federal level. So if you do employ across multiple states and territories, this will apply across the board. So that's at least some benefit or upside to the tax considerations today. I think what we'll cover off on first is long service leave when it's paid to continuing employees, so when they're actually taking their long service leave. Now, you'll all be aware of the tax tables, the weekly, fortnightly and monthly tax tables. You would use them when you process payroll to calculate withholding tax on pay. So the exact same tables are used for the purposes of long service leave once you've obviously established what the amount you are going to pay as long service leave is. Therefore, the withholding is based on those tables. The only, I suppose, circumstances you need to consider is if you are paying an employee long service leave for a period greater than one of your pay periods, so if you're on monthly pay and you're paying the employee for 3 months worth of long service leave, you need to work out what the monthly withholding amount is and times it by the period of leave. So using the same example, if you're using the monthly withholding tax tables, work out what the monthly withholding is and times it by 3 months. So it is quite simple in this scenario where you have the employee taking the actual leave. I guess it's harder to get to this point than it is to work out withholding with this particular scenario. What I will mention is that when you are paying long service leave to employees that are taking the leave, it is actually considered ordinary times earnings, or OTE as it's commonly referred to. Therefore, superannuation guarantee will apply, so ensure that you are covering your obligation in that respect.
Well, we do get that question a lot actually about what does and doesn't count as ordinary time earnings, and the Workforce Guardian team isn't able to answer questions in relation to super or tax or salary sacrificing. So that's a really important point.
It is, and I guess with SG, the key is that the ATO actually felt that it was so confusing that they actually have like a 40-page ruling just specifically to address OTE examples. So
we love 40-page rulings.
We
That's
do.
great.
Well, yes, we do, David. Scenario 2, tax considerations for paying unused long service leave on termination of employment. So scenario 2 has its own special tax treatment. So when we want to work out the withholding applicable, we will refer to the ATO Schedule 7. This is called or referred to as the tax table for unused leave paid on termination. Okay, it sounds terrible and it's not using the tables that we're used to using. However, this document and this advice from the ATO is actually brilliant in that it's quite helpful and quite straightforward. It has a table. Obviously, it addresses other leave types that are paid out on termination as well. And what it does with long service leave, it does talk about the different withholding rates that apply to a normal termination, such as a voluntary resignation, termination due to inefficiencies or retirement, versus the withholding rates that will apply to other terminations such as genuine redundancy, invalidity and early retirement schemes. So first and foremost, it does break out into those categories, so knowing exactly what the circumstances of the termination are.
Yeah.
Then what it does is the withholding rate is different and it is determined in reference to the accrual of the leave. When I say that, what I mean is there are components for the accrual that you need to address. They are the pre-August 1978 component of the leave, the August 1978 to August 1993 component of the leave, and then the post-August 1993 component of the leave.
Wow. Okay.
Yes, David.
Okay.
Still complex, albeit federal. The other good news, I guess, to Schedule 7 is for each of those components, it actually does tell you or advise you which part of the payment summary those components should be disclosed in. So they're trying to be nice as much as possible. The exception for withholding on unused leave payments is when you are paying to a deceased employee, or as David mentioned before, usually the deceased estate of the employee, there is no withholding. So just being aware that if it is to a deceased employee or their estate, please don't even look at any of the tables, no withholding applies. The other quirk, as we discussed with super guarantee, is terminations. When unused leave is paid on termination of the employment, it is actually specifically excluded from the definition of OTE, so therefore there is no SG applicable. So please remember that. This is not a scenario for OTE. The very last, and I will say unlikely scenario, is when you back pay long service leave. This realistically would only apply where you've either underpaid an employee or you've had an error or oversight of some sort and haven't paid them their long service leave. Schedule 5 applies, and it's again, it's a very well structured document. It does allow you to actually pick a number of methods to calculate the withholding, and it does greatly rely on the timing of the back pay, so whether it's been in the same financial year or not. It has two methods, methods A and B. Method A is suitable for back payments regardless of the financial year. Then method B has two parts, 1 and 2, and then what method 1 is specific to if there are specific periods in the current financial year, whereas Schedule 2 is sort of regardless of when the payment relates to. So the good news is it does lay it out for you. It gives you a step-by-step guide on how to come to the calculation. It gives you the calculation method sheet, if you like. So it's brilliant in that way. Also, a point to note is there is a withholding limit. So if you go through the steps and you work something out, there's a withholding limit of 49% on tax that can be withheld. This limit is also influenced, especially so please be aware, if the employee that you are paying the long service leave to has either a HEX, a trade support line, or a financial supplement debt. So please be aware of those, as they will influence the withholding rate that you are allowed to apply. And this document, as I said, will outline all those features for you, but being aware is obviously, as David said, always knowing before you get to agreeing with your employee and doing the full calculation, knowing that that is a quirk and something you need to address.
It's one of those things, isn't it, that our teams at Workforce Guardian and at ADP can provide fantastic advice, but one thing we can't do is time travel. So yes. We can't undo what has already been done. So really critical to get that advice before you do anything.
Absolutely, yep. And then, as we promised at the beginning, we have a useful resources slide here. David has been kind enough to give you a great link through to the New South Wales Industrial Relations. And then I've also provided you with the links to Schedule 7 and Schedule 5. If you are embarking on the journey of paying long service leave, these should be very helpful and resourceful for you. And then, speaking of helping you out and arming you with good tools, we have some good contact details here for you as well.
Thanks, Angela. Yeah, look, I was just going to finish off by saying that if nothing else, hopefully what this webinar has done is provide you with enough information so that you realise, I guess, how much we don't know. Like you don't know what you don't know until suddenly you attend a webinar and we start talking about all of these nuances, not just of New South Wales long service leave legislation, but then the federal tax implications and all the rest of it. So if you are looking for a one-stop shop, if you're not already a client of ADP, please contact ADP. Give them a shout on 1-800-000-729. Friendly team there would be happy to take your call and discuss ADP's range of payroll-related solutions. And as part of the partnership with Workforce Guardian, the great thing is, as an ADP client, you then have access to the dedicated workplace advice line, which is provided by our team here at Workforce Guardian from ADP. Yeah. So if you are already an ADP client, you can contact that team with any of your long service leave related questions on 1300-443-088. Please just do keep in mind that we can't answer any questions relating to super, tax or salary sacrifice arrangements. But that partnership is fantastic. It's there to support you, so please do get in touch.
Excellent, David. Thank you very much for being here today and for giving everyone some wonderful insights into long service leave.
My pleasure. Always great to work with you too, Angela, and I'm sure that we'll be providing some other webinars in the future, so hopefully everyone's attendees today can join us again next time.
Absolutely. So thank you, everybody, and we really do hope that you've gained some really helpful hints and know now where to go when you're paying long service leave. So thank you very much, and we'll see you next time.
Thanks, everyone. Take care.